Good morning, everyone. Welcome to the TradeXchange Week Ahead Webinar. Happy Memorial Day. We're doing this a little earlier than usual, members. It is a holiday weekend, and we want everyone to enjoy, relax, spend time with the family. So we're doing this a little earlier, and we'll be sending it out in the news desk as well as our social medias. So, members, we're going to same routine as always. We're going to go over the previous week and then look ahead to next week. We're also going to go over a quick few more updates on our news desk new UI that we're going to be releasing hopefully very soon. We're very excited to get this out to our members. We also sent out a survey this weekend, members. If you have the time, check it out. Let us know your thoughts. It came via email. Let us know your thoughts and ideas on what you're looking for in the next iteration of the trade exchange. So now let's take a look at your week ahead following this brief look on last week. Another week where the NASDAQ took control. Following earnings headlines from NVIDIA, it seems like AI powered a full overdrive on specific areas in the market. NVIDIA had one of its biggest market cap moves in a day in a long time. One of the biggest in any company in a long time. Following NVIDIA, we had Marvell, MRVL. All they had to do was mention AI. The key word on Marvel's commentary by the CEO was tremendous opportunity that AI presents. Marvell and MRVL closed up 32% on the day following their earnings and that comment from their CEO. The Dow ended the week lower, and the S&P ended up less than 0.5%. On the commodity side, we saw strength in orange juice, gasoline, corn, and crude oil. Weakness in coffee, cotton, silver, platinum, and nat gas. Over the weekend, we finally had a decision to end this debt ceiling talk with an agreement. We're supposed to get the follow-up today on the written aspect and hopefully voted on by midweek to finalize this part of the ordeal in the debt ceiling discussions. One interesting area that we've been discussing in the past, but not really mentioning as of late, is the quiet rising day by day of the yield markets. The 10-year yield hitting levels not seen in close to 3 months, yet not really being discussed by many analysts, traders, or even by the media. Since earnings season is basically over, would it be surprising to know that we actually had an earnings decline this quarter of 2.2% year over year? With the way the market has acted during earnings, you would not notice that the actual earnings were lower than expected. Markets have bucked the trend on every negative headline in the past few months, keying on the fact that earnings did not come in as great as expected. It seems like inflation is old news now. But one key indicator on Friday on the economic reports showed an increase to inflation expectations as consumer prices rose in April. That rise changed a recent trend of moderated prices. Keep in mind, this is one of the Fed's key inflation gauges, and the markets barely even noticed. Is that a good sign that we are moving away from inflation worries, or is complacency bad for markets? Has the AI craze changed momentum from the worries of Fed speak and inflation to the future of what could happen. We just hope this is not the same craze as the metaverse and blockchain. We all remember that craze and what happened with every little and large company putting out press releases mentioning keywords metaverse and blockchain. What we're starting to see is that happening with AI. But from everything we've read and everything that we've heard, this could be the real deal. We'll see what happens as the days go on and the summer doldrums hit the markets. This week we have a shortened week, members, but a week filled of data on the employment side. With the JOLTS job openings on Wednesday, initial claims in the ADP report on Thursday, and the ever-important employment report on Friday. Some of the key data points we will go over when we go through our report. Now, members, let's take a quick peek at the TradeXchange Week Ahead report. Upcoming U.S. and world events and company events for the week. As always, on the company events side, members, and as you can see on the conferences, if anyone has any comments or questions, shoot us a message on the Ask the Desk, and we'll be up to follow up in regards to any companies that are presenting or commenting on these specific events. Top earnings for the week, we still have a bunch of big cap earnings to go. Broadcom, AVGO, CRM, Dell, DELL, Nordstrom, JWN, Lulu, LULU, Macy's, MongoDB, and Network, and TAP. Members, keep in mind, U.S. markets are closed tomorrow for Memorial Day. Tuesday, we have consumer confidence, the Case-Shiller and HPI index, and Fed speak bargain. On Wednesday, we have the JOLTS job numbers, Chicago PMI, and the Beige Book. Fed speak Bowman, Collins, Harker, and Jefferson. Thursday, we have your ADP employment report, jobless claims, productivity and costs, PMI and ISM manufacturing, and construction spending. And then Friday, we have the all-important employment report. Members, keep in mind as well that following this week, we do have the Fed going into their blackout period, going into the FOMC meeting in June. Taking a peek, these are your conferences for the week, members. As always, reach out to us if you have any comments or questions. Economic calendar for the week. Monday, U.S. Memorial Day, markets are closed, members. Keep that in mind. Tuesday, pretty busy day on the economic side, as well as Wednesday, but Wednesday we're more focused on these Fed speakers. Also have the Chicago PMI on Wednesday with that JOLTS number and Beige Book. We'll get a better indication on certain districts throughout the country in regards to prices and employment through that Beige Book report. That JOLTS number, members, keep in mind, that was Yellen's key indicator on employment when she was the Fed chair in the past. Thursday, another run of many economic reports. And Friday, members, we have that all-important employment report on a Friday morning. We'll give more details on that throughout the week. International calendar, as well as your Fed schedule breakdown and your week ahead TradeX commentary. Earnings for the week, members, as well as your weekly sector performance. NASDAQ technology continuing to truck ahead higher, up over 5%. Communication services, as well as strength. We saw weakness this week in consumer staples, healthcare, materials, and utilities. Industry comparisons, members, to the NASDAQ up 23.97% year to date, S&P up 9.53 year to date, and the Dow down 0.16%. Fear and Green, members, I think this is almost 2 months where we have seen the fear indicator basically non-existent. It's been a constant greed mindset. Last week, we were at 68, this week at 67. Clearly, that mindset and complacency is in play, as we mentioned earlier, in the fact that no one is basically talking inflation, and every hawkish commentary by the Fed is being disregarded and thrown to the side. Your target rate probabilities, currently the mindset, members, is for a raise of 25 basis points. Your 10-year constant maturity has hit spot 7-4 again. We were trending at with better than expected numbers. At one point, we were hitting a spot 4. Now we're back to spot 7, yet no one is taking that to notice. Year-to-date percent returns, orange juice, large move. We added that to the list this week since it's been in play. Up over 41% year-to-date on orange juice. Sugar, small downtick from last week, still up 27%. NASDAQ, almost more than a 3% move this week. New highs. S&P as well higher. Gasoline saw a bump of about 5%. So we're watching those closely. Nat gas continues to be weak, down 45% year to date, as heating oil down 29%, wheat down 22%, and VIX down 17%. Your AAII investor sentiment survey. Remember, this has been flip-flopping back and forth for the past few weeks. It seems like the investor sentiment survey is the same as the mindset of what's going on in markets. No one really knows, but the trend is continuing to be on a bullish sort of mindset. Taking a peek next, we have your sector outlook weekly. As always, the top three. It's the big three, members. This is what it's all about: information tech, communication services, and consumer discretionary. And the weaker of the bunch have been there. The top four have been the top four on the bottom all year: energy, utility, financials, and healthcare. IPO lockup expirations, expected IPOs, and your FDA calendar. Now, members, a quick peek at some charts, and then we're going to go over the new another look at the UI for the new TradeXchange news desk look. Gold, no changes to the chart, members. Since that 2000 break, we are back in a trading range on gold. 2000 upside, basically trended right to that support level of 1950s, bounced off of it, and ended right at that downtrend. Watching gold closely, downtrend break to the upside could retest 2000s, but we're watching this level on any reversals. SPY, no changes to the chart, members. What a week on the SPY. First, we tested support. Keep in mind, members, these have been here for quite some time. We tested support at 410s, bounced right off of it, and ended right at resistance in the 420s range, ending at 420.02. So we're watching this very closely on the SPYs. Very key upside that could, if this could break, we could see 431, 432. Watching it closely on an upside move. NASDAQ daily, no changes to the chart. I think we were more enthusiastic about the NASDAQ chart last week than any chart we have seen all year, and the bullishness continued. We are testing a key level resistance here, members. Very key, which we added this week. We added this because who would have thought we're going to get such a move on the NASDAQ in the span of 5 days? We saw about a 600-point pop in 2 days on the AI craze. Let's see what we get now as we test resistance. This week, we're a little less enthusiastic on this chart since we are starting to test some resistance levels, and we are seeing a very, very strong move in the matter of 2 days. SPY daily, Triple Q daily, IWMs, and your 10-year yield daily on a moving average and trend look with resistance and support levels. 10-year yield daily. We added an uptrend this week, members. Another perfect technical chart. We touched support. We broke a downtrend, and we're continuing to trade higher. So we're watching the 10-year yield right around this gap fill level on the 3.9s. We mentioned 3.9 and 4% is a key level resistance. We're right at it. We almost tested it on the past week. So we ended the week right at resistance. We added that short-term uptrend, and we're testing the gap fill. It'll be an interesting week to see what happens in your 10-year yield this week. Diamond daily on the moving average trend look. IWMs, no changes to the chart. Last week, we mentioned how we are watching IWMs closely. Levels of 170 to 180s. It feels like the IWM has been pushed to the side and placed in the corner. We need a break above 180 for the strong upside move, or a break below 170. We're fluctuating at 175, back and forth, members. As you can see, a very interesting range being built here. Let's get some volume. We can see a directional move to the upper downside, and then we can go to the all famous and say no one puts the IWM in a corner, and we'll see a move in either direction. HYG dailies, S&P 500 daily. Basically, members, how many times have we mentioned that 4,200 level as being a key level resistance? We ended above it, which is positive for the bulls. But this time, it'll be interesting to see if we trend and reverse on a bearish mindset. Very important week for the S&P. Very important week for the markets all in all. As you can see, there are a lot of them are trending by resistance levels. Your VIX basically building a similar pattern as it did in early 2021. We'll be watching that one very closely. Oil, no changes to the chart. The range continues on crude oil. $70 downside support, 75 upside. Not much going on here. A little backing and filling, so we're going to wait for a direct move in either direction. US dollar, we added an uptrend very similar to that 10-year yield chart. If you guys can look back on that one. Well, we mentioned last week that we broke above an over 1 month long range pattern built. We've always said this, members. The longer the range, the bigger the move in either direction. This is a 1 month move. We've seen charts before that have been going back 2-3 months. So expect to see some pretty big moves once these ranges are broken. But we added that uptrend, watching it closely, almost right by resistance on the US dollar. Bitcoin, not much going on at all. It's trying to find its way. It feels like it's in its own little universe right now with Bitcoin, not really moving off of NASDAQ, which it did in the past. So we're seeing some decoupling between the Bitcoin and NASDAQ plays. SMH daily, what a chart. I'll just leave it at that. When you look at this SMH, it's not it's a very interesting chart. The euro, another pure technical chart. We added a downtrend. This is another example of a pure technical chart. Wow, we just said that. We broke an uptrend, weakness. We broke not one, but two support levels, weakness. Now we had almost a perfect test of this. We broke that uptrend, and we saw weakness right to that support level. What a test of support. Could not break that 107s. Trending here, watching to see if we build a range and for a possible directional move if the range is broken lower or that downtrend is broken higher. So members, that is your TradeXchange Week Ahead report. We're going to take a quick peek at your the UI, then we're going to answer a couple of questions. So members, this is the, as we mentioned, the new UI of the TradeXchange. A little updated look. We're very excited to release this. It's going to be set up in certain ways where the current mindset of the news desk will not be changed. The streamlined approach will always be there. As you can see, this will be your news desk. What we'll be adding is a type of rooms or other areas where it will be a little more diverse information. We'll be adding a community chat room where our members can provide information, thoughts, ideas, or just take some time away from markets and talk, in regards to ideas in this type of crazy of a market. But the other thought process we'll be adding some rooms where we'll be having like a large cap room, small cap rooms, momentum rooms, option rooms, are Fed speak rooms, where you'll just be focused on those specific headlines in case you don't want the full news desk that we currently provide. We're very excited about this, members. We like we mentioned before, we sent out a survey over the weekend for anyone to provide us any feedback or thoughts. A new streamlined, more modern look, less of the clutter, separation on lines instead of random colors. You get the notifications, the squawk, all that is the same. We're just trying to make it a little more modern and sleek for our members. Any thoughts, members, will be greatly appreciated. This is a new sidebar look. Our rooms, the community chat, squawk player, newsletter. Well, you have both newsletters, week ahead, a new and improved search aspect, TradeX Plus, Ask the Desk, settings, and a log out button. So we're very excited, members. Shoot us any feedback or comments on this while we do it. We'll also be sending out some beta testing, hopefully in the next few weeks, to make sure that it is up to the Trade Exchange level of information. So, members, we had a couple questions, and then we're going to be ending this since it is a holiday week. We want all our team and our families to enjoy this week with their family and friends, and that's basically that. A few questions, as always, our thoughts for the week, members. This week, it's with the debt ceiling out of the way, it'll be interesting to see what markets do on the open on Tuesday with the market open. We'll be watching the futures going into that open, but we'll see what happens on that. Is it going to be a buy the rumor, sell the news? A lot of the thought process was, did we really think that they were going to default? I don't think many traders expected that to happen. So the question comes down to, we haven't really seen much weakness in markets during these debt ceiling talks. So that comes to an interesting mindset and closure in regards to what the market will do once this is finalized and completed. This week, members, we're all about economic reports. As you can see, we have a lot on tap this week. Very close watch on these jobs numbers and reports. Very close watch on these Fed speaks, since they are going to be a Fed blackout period coming next weekend, going into the FOMC meeting in June. The thought process, members, is this: we're starting to see complacency, and we don't like to see complacency as traders. We want to see that volatility, especially when it's deserved. We've been seeing I think about close to 2 years in volatility off of inflation, and the fact that we're starting to see inflation change once again, we're not getting that momentum or movement in markets as we've gotten in the past. So clearly, there is some sort of a change coming, and we're wondering, is it a little too soon? Any hawkish commentary from the Fed is being disregarded. Any hot reads on inflation are being disregarded. So the question comes down to, is it complacency, or are traders just a little too exhausted in regards to this market movement? We'll be watching it very closely, members, watching these economic reports, watching the Fed speak going into this weekend. A few more key earnings on watch this week, as we showed you before, and we have a shortened week. To top it all off, it's the summer season. So volatility tends to slow, and action in markets tend to go in directions we do not expect. So it's going to be an interesting summer. It's going to be an interesting week, followed by a lot of economic reports and Fed speakers going into the next FOMC report in June. Members, once again, we want to wish everyone a happy, safe Memorial Day weekend. Keep in mind, U.S. markets are closed on Monday. Check the news desk over the weekend to get yourself ready for the open. Thank you, as always, members. Thank you to everyone. And we always appreciate all the comments, feedback, since that is our way of trying to make Trade Exchange a better service for all our members. Thank you. Enjoy. Trade Exchange out.